Welcome to our eSignal weekly Forex forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to point out that trading involves risk of loss and is not suitable for all investors. I want to give you some words of wisdom before we hit the charts too, and I want you to think about this afterwards. Harmony between market behavior and your mindset is the key to trading happiness. Notice we put market behavior first. Your mindset needs to be, the way you think needs to be aligned with how markets move. First market we're going to cover is the Australian US dollar. You can see Aussie US dollar melted down pretty good. You shifted a pretty big pattern here. You shifted a longer term secondary pattern. We talked about this of the past couple of weeks now about that potential resistance just above 94, even right around 94 the figure, and that definitely proved to be the case. Here was the big signal right here. You shifted that 5-day pattern right down right there. This pattern right there, that very short-term pattern that had developed, that bullish pattern, once you shifted that right there, that was significant, and that's what led to lower prices. Let's take a longer-term look at this guy. Let's go all the way out to a monthly chart, and we think you're going to see substantially lower prices. We think 80 even is going to be the case. We think this movement here, this rally from 08 on into 2011, that it's going to retrace along the lines of 5/8 or maybe even 2/3. So we think you'll see 80 even. We think you'll probably see the market a little bit lower than 80 even long term. So a lot of downside in the Aussie dollar. Really tremendous opportunity in so many of these markets because these major moves that we're seeing vis-a-vis dollar strength, really you're just at the beginning of that, and we're going to show you why also. Next market we're going to cover the dollar Swiss. The dollar Swiss, it got to our longer term target there, that purple line. Still from our perspective plenty of room on the upside. We wouldn't be surprised if we saw 95 the figure this run up, and I say that because if you pan out to, again, here's a monthly chart, long-term chart, you can see that, hey, this market just did break out, didn't it? So still plenty of room on the upside in there. We think that you're going to be better served hanging on to positions, getting more comfortable with longer-term charts. Here's a weekly chart. So focusing on the longer-term charts for trade management, but getting down on those intraday charts and buying dips there. So definitely still buying dips on the shorter term charts, and then you want to manage those trades here up on the higher time frame charts. There's a weekly chart, so we think there's still some room up above for this current move right here. Next market, the dollar index. It's just been a tremendous rally. You see it there on the weekly chart, and we talked about this. Here, I'll pan out to a monthly chart, and this market, we see it as just now breaking out. There it is. It'll be significant come month end. We'd like to see if we get a monthly close above 84 even, that'll constitute a breakout. That's going to be interesting. Next week will be interesting too. If we can get 2 successive closes on a weekly basis above 84 even here. See, you got a close above it here. You got a second close above it there. That was pretty telling. That was market strength. That told us to buy the next dip in the market overall, but you couldn't get those 2 successive closes to really give the market a breakout. You're in a potential situation now where you can do that. So the weekly chart potentially breaking out there you can see it scooted up. You see the big picture where that market's come from. There it is. That's the big picture. That's what you have to focus on, where that market's going to go. As far as a trader, there's nothing wrong with buying dips intraday also. So you've got to start to tie it all together. One big reason we've been so bulled up on the US dollar, and so much of why you've had this last run up in August here too. August generally a slower time for the year for the economy and the markets, but look at that big move. We're going to show you the August retail sales numbers, and we talked about this, the possibility of a strong back to school retail season for US markets. And here's the actual numbers. Hopefully you can see these. If not, we pulled them right off the census.gov site, the U.S. Census's website. Here's the number I want you to see. That's the last retail sales figure. That's 396 billion, if I'm not mistaken. That number's in millions right there, so that'd be 396 billion in sales. Look at how much greater that is than August of 2013, where it was 378 billion. Now you're 396 billion. That's a whole lot more, right? Here's what I was talking about last week, where you've had tremendous growth on the retail side this spring. And look at, you continue to add to that. The August retail sales figure, you may see, oh, it's only up 0.6%, but that's 0.6% on top of large numbers. This number is on track to clear 400 billion for the first time ever by year end. So the U.S. economy is humming. Retail sales are growing. Consumer confidence is growing. All that is why you're seeing on this chart such a strong U.S. dollar, and why you need to focus longer term, because you look around the globe and I don't see the numbers. I don't see that growth that you're seeing, that sustained growth that you have when you look at these numbers and you look how they went in '08 from 337 billion to now 2014 almost 400 billion. So you look around the globe and where do you see that kind of sustained growth? Where do you see that current growth? What's happening now in the markets? What's happening now in the U.S. economy? That type of growth, hard to match that. So that's why we feel that that breakout above 84, even in the dollar index, is going to lead to further upside. And again, from a trader's perspective, that's just tremendous opportunity. Here's the euro long term. Here's the euro US dollar on a daily chart. And you can see you're finally in a buy zone, what we call that. That'd be shorter term though. Looking at that daily chart, you pan out to a weekly chart, and we think there's plenty of room below. Even to the bottom of that zone, we think it's likely that you will get a full-blown 5/8 or even 2/3 retracement of this move before you get before you get any kind of consolidation, perhaps even a short covering move. But again, longer term, we'll pan out to the futures chart. You look at the monthly chart, there it is, and there's a whole lot of room below here. We think certainly 120 will be in the cards, and it'll probably overshoot that. I mean, you've got an outside chance at 110 even when you look at the economic performance in the U.S. compared to what's ahead for Europe. Gold market next. Here's the daily chart, and no surprise, you made a lower low here. We talked about that. You made a longer term lower low just this week, or Friday. You took out the summer low or the spring lower low here. We talked about what you're watching both on a short term basis. This pattern, this shorter term pattern of lower high versus the longer term pattern, also lower high. So no surprise, gold giving way on the downside. And this is the gold market really brings up the point we were trying to make before, as far as harmony between market movement and how you think is really the key to trading. And we'll come back to that. But you have to take a serious look at how you view markets if they're not making sense to you. And gold is a big one for that. When I talk to a lot of people, they always ask me about gold, and to them, I just show them the chart and I explain them that my strong belief that the pattern on the chart is a reflection of underlying fundamentals, and that's just my mindset. And people have a hard time accepting that. But we all believe what we believe in. My point here is that if how markets move, they're not making sense to you, if you're disagreeing with the markets, then number one, you better not be trading, because you're going to lose money. But then you better try to correct that so that how you think is in harmony, is aligned with how the markets move. Last market we're going to cover, dollar yen, and we were calling for 108, and you guys who follow the report on a regular basis, you know that we've been saying that for some time, since really the market broke out, and here 108 was the upside target. You're pretty close to that now. We think likely with the momentum there, you'll probably blow past that. If it can do 108, it'll probably do 110. So we like this market on the upside. Still, dollar yen, yeah, we think they'll stretch that. We think essentially you'll probably get a 2/3 retracement of this move, probably even a little bit more than that. So 108 has been our longer term target here. Easier to see on a weekly. And if you get 108, you probably get 110. Hey, thank you so much. Always a pleasure to do the report. Once again, I'll leave you with those words of wisdom, and you want to give that some thought. Thank you so much, and we'll see you next week.